Okay, so what if I told you that Warren Buffett himself says there's one simple book, just one, that holds the key to success for pretty much every single investor out there? Well, that's exactly what we're digging into today. I mean, when you've got a powerhouse like Buffett basically laying out the blueprint, making it sound so incredibly simple, you've got to ask, right? Why isn't everyone doing this? If this is the way, what's stopping us? Well, to get to the bottom of that, the author of the book, the legendary John Bogle, he doesn't hit you with a bunch of complicated charts and jargon. Nope. He answers that question with a story. A really simple parable that just perfectly nails the single biggest mistake most of us make with our money. So, picture this family, okay? Let's call them the Gotrocks. Now, this family, they own everything. I mean, 100% of every single stock in the entire country. Every dollar of profit, every bit of economic growth, it all flows directly to them. They're playing what you'd call a perfect winner's game. As the country's economy grows, so does their wealth. Simple as that. But then, these helpers show up on the scene. Brokers. And they start whispering in the ears of some of the Gotrocks family members, telling them, hey, you can outsmart your cousins. We can help you get a bigger slice of the pie. The thing is, every time they make a trade, there's a commission, a fee. And for the very first time, the family's total wealth, the whole pie, actually starts to shrink. And of course, it doesn't stop there. Pretty soon, they're hiring money managers to help them pick the best stocks. And then, believe it or not, they hire consultants to help them pick the best money managers. You see what's happening? Every new layer of help just adds another layer of fees, and all those fees are just eating away, bit by bit, at the family's returns. So finally, the family's wise old uncle pulls them all aside. He points out something that should have been obvious all along. He says, look, these helpers, they're not actually helping. They're taking. The solution here is so simple. Get rid of all of them. The brokers, the managers, the consultants, all of them. And just go back to what worked in the first place, owning the whole pie. And that whole process, that's what John Bogle calls financial intermediation. It's this system where all the helpers, the brokers, the managers, you name it, take their slice. And it's how the simple, straightforward winner's game of just owning businesses gets twisted into a loser's game for the average investor. Now, the story of the Gotrocks family, that's just a parable, of course. But the math behind it, oh, that is brutally, undeniably real. Bogle has this great phrase for it. He calls it the relentless rule of humble arithmetic. And it's this simple math that proves, once and for all, why trying to beat the market is basically a rigged game. $400 billion. I mean, just let that sink in for a second. That's roughly how much the financial system's croupiers, the helpers from our story, rake in from everyday investors like you and me, every single year. That is a staggering amount of money, and it comes directly out of our potential returns. Here's how it works, and it's super simple. Before you factor in any costs, investing is what you'd call a zero-sum game. For every person who wins, somebody else has to lose. But the moment the financial system, steps in and takes its cut from everybody, both the winners and the losers, well, it's no longer a zero-sum game. It becomes a loser's game. It's just a mathematical certainty that investors as a group have to underperform the market. And if you want to see what that looks like over a lifetime, this chart is just wow. This is what Bogle calls the tyranny of compounding costs. Look at this. You start with 10 grand. If you just get the market return, over 50 years, it grows to almost $500,000. Incredible, right? But if you're in the average fund with its higher fees being skimmed off the top year after year after year, you end up with less than a third of that. The helpers literally can eat up almost 70% of your potential wealth. It's staggering. Okay, so if trying to beat the market is a loser's game, a rigged game, how in the world do you win? Well, Bogle's solution, it turns out, is beautifully simple. He puts it perfectly with this quote. Instead of driving yourself crazy, spending all this time and money searching for that one magic stock, that one genius fund manager, the needle in the haystack, Bogle's advice is simple. Just buy the whole haystack. Own all of them. Just own the entire market. So really, when you boil it all down, every investor faces this fundamental choice between two paths. On one hand, you've got active management. That's the complex, high-cost game of trying to outsmart everybody else. And on the other hand, you have indexing, the simple, low-cost path that, get this, guarantees you get the market's return. And the index fund, that's the actual tool. That's how you literally buy the haystack. It's nothing more than a mutual fund, a basket, that holds all the stocks in a particular market index, like the S&P 500. It lets you own a tiny piece of every single business, and by doing that, you guarantee you get your fair share of whatever returns the market generates. So we can actually distill Bogle's entire philosophy down into 7 key lessons, 7 really actionable principles for success over the long haul. And it's all just a framework built on pure common sense. And here they are. And the key thing to notice is that none of this is about being a genius stock picker or timing the market perfectly. No, it's about the simple stuff, choosing low-cost funds, making sure you're diversified, and probably the hardest part, having the discipline to just stay the course. It's not about being smarter than everyone else. It's about controlling the things you can actually control, which are your own behavior and, crucially, your costs. You know, when you zoom out, Bogle's message is really about a huge fundamental shift in how you think about investing. It's about taking the power back from this massive, complex financial system and putting it right back where it belongs, in the hands of the individual investor. It's like, stop trying to swim upstream. Stop fighting this impossible battle. The goal shouldn't be to beat the market. The goal is to be the market. Because when you do that, you guarantee that you capture almost all of the return that actual businesses are generating, instead of just handing a huge chunk of it over to those helpers we talked about. And you know, this wisdom from another investing legend, Benjamin Graham, just captures the whole spirit of this perfectly. He said, in the short run, the market is a voting machine, all based on popularity and sentiment. But in the long run, it's a weighing machine, based on the actual value of businesses. The focus should be on the weighing, not the voting. And really, that's the core question this whole book asks us to think about for ourselves. Are your investments being voted on day to day, caught up in the speculation and the noise, or are they being weighed for their real long-term value? Are you playing the short-term voting game or the long-term winner's game of just owning great businesses? I think common sense tells us the answer is pretty clear.